Good evening, everyone. Thank you so much for joining us for planning your auto purchase workshop. I'm Terry Conley. I work in the marketing department for Triangle Credit Union, and I'm so happy tonight to introduce to you, and he'll be on joining us in just a second, Muhammad Ali, who is the consumer lending manager for Triangle. If you've logged on, you'll notice that your microphones are currently off, and we ask that you keep them off. People will be joining, I'm sure, as we start and get into a few more of these slides. So we want to make sure that there's no disruption. So we're going to keep those microphones off for a few minutes. A couple of other things that we wanted to note is that this workshop is being recorded. And we are encouraging anyone who would prefer not to be heard to submit any questions in the Q&A or the chat, and we'll be monitoring that throughout the workshop. At the end of the workshop, we will open up the microphones. I'll make sure that they're all turned on, and there will be a Q&A time as well. So if you don't have opportunities to or don't want to use chat or Q&A, then you can ask Ali at the end. So Ali, I'll go ahead and I'm going to turn that over to you. Thank you again so much for doing this presentation.
Thank you very much, Terry. Good afternoon, everybody. My name is Muhammad Ali. You can call me Ali. I'm the consumer lending manager here at Triangle Credit Union. And one of the things that I work on day in and day out are auto loans. As the new year begins, we have President's Day approaching. We thought it would be a good time for us to talk about automotive lending, financing. What are your options out there? How you should start your journey, what you should look at. It can be a daunting process for us at times, trying to figure out with so many avenues online, in person at the dealership. Should I go to my credit union or should I go to the dealership? So trying to answer some of those questions and trying to make sense of the process a little bit. I have a few high-level topics that I would want to discuss with you this evening. But after that, I'd love to take your questions. We'll open up to any comments, questions. I am definitely not a know-it-all, but I will try to answer all of your questions as much as I can. If not, we'll try to gather that information and maybe share with you through one of the many channels we have for our members, whether the branch or online or the contact center. So without further delay, let's jump into our topic for this evening. So a quick overview of what we'll cover in terms of purchasing a new auto or a new to you auto. I like to say that because some folks might be in the market for a new car or a used car, but it's always new to you, whether it's new or not. We'll talk about the cost of that vehicle. We'll talk about what part credit plays into financing that vehicle for you, how you can utilize the credit system to work in your favor to get to the car that you'd like to be driving. And we'll wrap up with how to pre-qualify for the auto that you're looking for the car purchase you want to make, and what are some of the steps and some of the nuances involved in that. So that is what the evening looks like for us today. So starting off your search, multiple different ways in today's world. We're so interconnected with the internet at our fingertips. You can always walk into a dealership, or you could start your search online. Facebook Marketplace, people selling things that they own personally, called a private sale in our world. Craigslist, it still exists after so many years. Cars.com, Car Gurus, Auto Trader, and a host of other websites that tabulate results of sellers in your region or in your market based on the criterion that what you're looking for to buy. There are online outlets like Room or Carvana that actually would deliver the car to your doorstep, which is pretty revolutionary in today's world, but that also happens. So depending on your level of comfort, depending on what you're looking for, you can start whether walking into a dealership or just sit back in the comfort of your home and go online and start your research, which is, I'm going to talk about it a little more, is one of the most fundamental steps in the car buying process. Whether you end up buying it from an online retailer or walking into a physical dealership, whether it's a new car or a used car or any type of vehicle, doing your homework at home is very crucial to setting you up for success. You want to know before you get into the purchase process, the acquisition of the car, what is it going to cost you? What are the explicit and implicit costs involved in that? So there's always the purchase price of what the car is listed for, plus the applicable tax in your state. There might be a shipping cost associated with that. There are car dealerships that have multiple locations, and you might have seen a car that caught your eye that's in a town that's not where you reside in, or that's where you won't be making the purchase. So they will happily ship that vehicle to the other dealership where you're close to. However, they'll charge you a shipping fee, and that can vary from a few $100s to $700, even up in the lower $1,000. So that should also go into factoring what the actual cost of the vehicle would be for you. There is insurance involved. There are different levels of insurance you can use to insure your asset. That is also a monthly cost that you should factor into your budget before making a decision for what car you should buy. There's registration, state and local taxes that are involved. You have to get an inspection on your car, even though it might be a brand new car or brand new to you. The state would like to get a little inspection in and put a stamp on it. The cost of gas. And if you are thinking an EV, an electric vehicle, or a hybrid, there still is a cost involved. You might not be pumping gas, but you might be charging it at your home, at your office, or some other place where you'll be incurring some charge to, as we say, filling up the tank, whether it's gas or electric. The maintenance cost, oil changes, tire rotations, radiator, things like that happen, the regular wear and tear that happens on the car, there's a cost involved to that. And as the cost of living and everything around us has risen, that cost of maintaining a vehicle has gone up. And lastly, repairs. Things break down, wear and tear happens under normal circumstances, nothing of your wrongdoing. At the end of the day, those are some of the costs you should factor in to what your budget is, whether you're looking from an annual basis or breaking it down to the monthly cost. Just the payment on the loan of a car should not be the number you should focus on. There are several other factors, like we just discussed, that should be a part of your decision making. At Triangle Credit Union, we have been in our local Nashua, Manchester dairy market for decades now, helping members like yourself and potential members out there with their auto and credit needs. Credit, they're funds you might use to put down for a vehicle. You might be able to buy it outright. For reasons best known to you, you might want to finance that vehicle. You might want to borrow some money to purchase that vehicle. So what is credit? How does that work? And what are the benefits of using that, a credit union like Triangle that is part of your local community here, to use that to your benefit? Simply put, it's a relationship between a borrower and a lender. The borrower borrows the money from the lender, in this case Triangle Credit Union, and the borrower will pay back the money for a specific period of time, called the term, along with the interest agreed upon. It is basically the cost of your funds that you've borrowed from the lender. How does credit work? I know there are a lot of myths and theories out there. Hard to address all of them, but I would love to give you a quick overview, a quick summary of how those things work. You're borrowing money to purchase items that you might not be able to buy outright, or you might decide that you don't want to use your lifelong savings to use for those items, like automobiles, houses, other expensive items in life. You use financing from a credit union like Triangle, which is the loan amount, and we base that on the credit worthiness of the borrower. Simply put, it's the ability to pay back what you've borrowed. Several factors go into it, terms like FICO and terms like good credit and average credit, things of that nature get thrown out. But I'm trying my best to simplify it and kind of make sense and how those things come together. Credit allows customers and consumers to borrow money to purchase those items and defer their payments over a specific period of time and make small chunk payments that knock down the principal and also cover the cost of funds, which is the interest owed to the financial institution. The credit score, as we say, is over a big spectrum, starts at 300, goes up to 850. There are three main bureaus in the US, Equifax, Experian, and TransUnion, that monitor our credit. That is the range of the score, as you can see in the screen, poor, fair, good, very good, and excellent. How is it calculated? I think that's one of the biggest myths that we have. What are the factors that go into it? Should I use my credit card a lot on a regular basis? Should I pay it off every month? Should I not go over a certain percentage of utilization compared to my credit limit on the credit card? Lots of myths, lots of questions out there. We'll try to make sense of at least some of them this afternoon. And lastly, how do I improve my credit score? If there are things on my credit report that have been detrimental to you obtaining credit in the past experiences, how do you work around those? A credit score, simply put, is a prediction of how likely you are to pay back a loan on the designated terms set by the financial institution based on the historic information from your credit reports. So based on the history of how you've taken care of your financial debts, have you been on time? Did you pay them off early? Were there situations where an extension was needed? A credit report sums all of those financial debts in one document that the lender looks at before approving or decisioning your request for credit, and in this case, to buy a vehicle. Your credit score, also referred to as a FICO score because it's the organization that manages credit scores, the Fair Isaac Corporation. It's calculated in several big categories of information. Payment history. Have you been in time? Have you missed some of the payments? Maybe you've been a little late on some of the payments, but you've now have caught up. That makes up 35% of the FICO score. The amount that you owe, the amount of debt that you have across a credit card, a purchase of real estate you did, auto loans, or any other personal loans that you might have, that accounts for 30% of the FICO score. The length of credit history, it counts for 15%, but it has a significant impact in terms of what you can obtain. So for someone who just turned 18 and has just started to establish their credit history, to borrow and then pay back and establish a recurring pattern of good payment history, will have a lower score because of the shorter length of their credit history compared to somebody who's been doing it for several years or several decades. So in essence, your age and how long you've been as part of the credit system has the effect on where you land in terms of higher percentage points of in terms of length of credit history, or lower percentage points. There's also new credit. How many new accounts, credit cards or auto loans or any other new credit that you might have opened? How recent has that been, and how have you managed that? And lastly, credit mix. So when a lender looks at your credit profile, are those all credit cards that they see? Is there a mortgage maybe, or a personal loan or auto loan? Is there a healthy mix across different borrowing categories that a typical borrower has, or if all of the borrowing is concentrated on one side? So some of the big high-level components that a FICO score is composed of. How do I improve my credit score? Some of the questions, that come up often. This is one of the bigger questions. You can improve your credit score by opening accounts that report to credit bureaus, a credit card, a personal loan, an auto loan, a mortgage if you're looking for a real estate property. Um, you can also do by maintaining low balances. What does that mean? So to simplify that, let's say you have a credit card. The credit limit on that is at $1,000. That credit card lets you borrow up to $1,000, and then you have to pay it back. Utilization ratio, it's a big term. What it means is based on your credit limit, so based on that $1,000, how much of that are you using? Rule of thumb, 30% is a good number to be around. So in this case, if it's a $1,000 credit card, you're about $300. I'm sure the question will come out, well, we have purchases that go way above the $300, almost $1,000, $800 or $900, and that's okay. It's the average where you typically fall. Some months you might have a higher balance, reaching almost to $1,000, maxing out the limit. But then do you pay that down and on an average hover around a 30% mark? That's a good rule of thumb. Paying your bills on time. One of the components, as we saw, part of the FICO score, how robust is your payment history? How many on-time payments you have versus not on-time payments? How many 30-day late payments do you have? How many 60, 90, or 120-day late payments you have? They all have a specific effect on your score. And as you can tell, as you go up 30, 60, 90, 120, the effect multiplies. So a 30-day late payment has a significantly less effect than a 60 or a 90-day late payment. And lastly, limiting how often you apply for new accounts. It makes sense for you to have a credit card, an auto loan, or buy real estate. What lenders look at, how frequently are you doing that? Are you doing that in a manner that's financially and fiscally responsible, or you're overextending yourself when it comes to debt? Now, tying the auto purchase piece that we started off with and the credit that we talk about, how do things come together? So if you remember, I talked about all the costs that are associated with buying a car: the car payment, the insurance, the gas, the repairs, the registration, the taxes, and the maintenance. So you take that and you look at that, and those can be estimated numbers. It's hard to arrive at an exact number, but it's best if you have a general feel for what that big number looks like. What is going to actually cost you on a monthly basis to own the vehicle that you're looking at. Next step is to pre-qualify for your auto loan. There's several reason advantages to pre-qualify for an auto loan. And lastly, what information do you need for your loan application, or in other words, to pre-qualify for your auto loan? Big question comes up at this point. I would like to buy a car. How much do you think I can afford? There's not an exact formula, as much as we have so many things that are just pinpoint and we can narrow it down to the single digit decimal value. There's no perfect formula for how much you can afford. But as you see on the screen, the general guide is that your new car payment, or the new to you car payment, should not constitute for more than 10 to 15% of your monthly take-home pay. When we say take-home, we're looking at the gross pay. That is before taxes. That's how lenders look at your ability to afford a debt. Obviously, there are taxes that get taken out of that. There are other retirement account investments that you make. So 10 to 15% would set you up on a path that's financially responsible. And when we're looking at a credit report and trying to analyze and figure out how can we help a member get them to the car they'd like, while also making sure that they're financially set up for success, we look at all the debts: credit card payments, personal loan, any other existing auto loans, mortgage payments. And in that course, as lenders, as underwriters, as folks who understand credit, there are items that a borrower might be paying for that we don't get to see. got to ask the question, how's that possible? If we're paying for something and that's significant enough, it should be on the credit report. One of the big things that we are paying for on a regular basis that does not show up and applies mostly to younger parents, but could apply to other folks too, daycare costs. Daycare costs are significant in this market, regardless of what the age of your child or somebody you're supporting may be. That's a significant cost that does not get factored into the credit report. That does not show up there. Rent is in a way another one. Something can be put on the application, but the total cost of rent could be different. So as the borrower, the responsibility on your side is to understand all of those costs on a monthly basis that you have, and then factor those in before you make a decision of how much of a vehicle you can afford in terms of a payment. How do I get pre-qualified? I mentioned that word earlier. You can easily get pre-qualified on Triangle's website. We offer a rate sheet on the website that tells you depending on the credit score tier. We talked about credit scores, so they're broken down into tiers. And they will tell you the range exactly where you fall based on your credit, what your approximate interest rate would be on the loan, depending on the amount. You can obtain a pre-approval. A pre-approval is we take a quick look at your credit report, look at your score, and tell you a simple short yes and no, or we might need some more information. Could we have your income, your pay vouchers, your income statement? We might ask for a proof of residence to establish that we are setting our members up for success and approving them for the amounts they can truly afford to get into the vehicle that they would like. The pre-approval process is not a full process of approval in terms of getting to the car, but it gives you a quick yes or no, or a maybe. A maybe is a counter offer. Let's say you're looking for a $50,000 car, and based on the credit picture that we looked at, you might be approved for a $35,000 car. You could use the difference between the 50 and the 35 from your own savings or cash that you might have, or you might then decide to change your decision and what you would like to buy. To qualify, we need a few things: specifics of the vehicle, what you're looking for, down payment, amount that you're looking for, proof of income that may be needed, as I shared, and proof of residence to establish that we, as Triangle, we do business in the southern New Hampshire area and some counties in Mass, that we're making sure that we are working with members or potential members who reside in the areas that we do business in. I am going to stop talking here. I feel like I've talked a lot, and I really hope folks have some questions or comments. I usually see when I do these sessions, it's a two-way street. Even being in the field, I always walk away with learning something new. So questions, comments, I will do my best to field them. And if we can't find an answer right now, we'll try to share that with you through a virtual channel or through our contact center. So Terry, if we could open up for questions, that'd be fantastic.
Absolutely. Thank you so much, Ali. Great job. So I did just go over to on the attendee side. For anybody who came in a little bit late, I do want to let everyone know that this webinar is being recorded. So you have two options. You can unmute yourself now and ask the question, or you can also put it in the chat or the Q&A. So I will open it up to our attendees that we have here and see if anybody has any questions for Ali.
I have a question. I own my car. Can I use that as equity to get a loan? And how long of a work history do they typically look for when they decide if you qualify or not?
That's a good question. You can use, if you have a vehicle, like in your case, and that you have either paid off or paid part of the loan on it off and you've built equity into it, like you said, what we have is called the auto equity program. You can take a loan against the equity that you have in your vehicle. If you're self-employed, we will look at your tax returns, and if you're employed through an employer that you're not yourself, we would look at your pay stubs or your paycheck vouchers. In terms of what length we're looking of employment, there is no certain number. We'd like to see, I would say, from a few to several months of what the income projection on the income trends are, and based on that, we would review your application.
So Ali, and just to follow up, so when if a member is looking for auto equity, can they also go to our application on our auto page? I think that there's auto equity right there too, correct? I can't remember.
There is on our rate sheets, auto equity is labeled, but to get a faster response and to be able to cut down on some of the processing time and maybe some of the more information we might need, I would highly recommend contacting one of our branch offices. Our frontline staff are very knowledgeable, and if there's something that they might have questions about, they reach out to me and my team, and we try to get them an answer as quickly as possible within the hour in most situations. So I would recommend contacting either a contact center too. Our main number is 603-889-2470. You can call in and you will get a quicker response because we pride ourselves on human connection. So somebody will answer your phone. You will not be leaving a message with a machine, and we'll get you the answer about your specific scenario.
Great. Terrific. Thank you for the question. That was a great question. Anyone else have any additional questions for Ali? I don't see any in our Q&A or in chat. So with that, Ali, can you proceed to the last slide? I think I don't know if there's some additional information there about, there it is. So this webinar, we will be uploading it on our Triangle University. It's our blog site, so it's triangleuniversity.org. In addition, anyone who attended tonight will also get a link to the webinar, so you'll have that as a reference. And you should be seeing that probably sometime midweek. Next week is when we'll send that out. So thank you, everybody, for joining us tonight. We appreciate your time. And Ali, great job. We really appreciate all the effort in the presentation. Thank you so much.
Thank you very much for the opportunity, and thank you for spending your evening with us, folks.
Yes.
Happy to chat with you. Thank you, and have a great evening.
All right. Take care, everybody.